Good morning, everybody. Thank you for being here. This is the IA Quickie weekly installment. Catch you up on all the news you need to hear over the last 24 hours, all the stuff that matters to you to make money making decisions. So let's jump in and talk about today. We're going to touch on a whole bunch of different stuff. Let's jump into the story. The story today is we're going to talk about Bitcoin, OTC exchanges, OTC levels, exchange levels, Bitcoin versus Tesla, DEXs, stock dilution, TVL, and a whole bunch more. So let's jump in and not waste any more time. First of all, if anybody's in the audience from Germany or Singapore, well, I think Singapore is asleep, but this is super interesting. From Coin Club, Germany is already one of the world's most crypto-friendly countries, according to this analysis. It is number one in the world. They have the highest number of Bitcoin nodes and also the highest, smaller population in the US, but much greater commitment to crypto than the US. And they have had some extremely positive developments with financial services, like the Sparkasse Bank offering wallets to trade crypto is a huge step for institutional acceptance. Singapore is number two. Again, proliferation is crazy. Number three is actually the United States, just for you guys to know. So well done, Germany. Well done, Singapore. And I think if I do this again 5 months from now, 6 months from now, I think Dubai will probably be number 1, 2, or 3. So let's talk about this. Is a piece from Pantera. They analyzed the exponential growth trend of Bitcoin over the last 11 years. And per Dan Moorhead, somebody who I greatly respect, we are now 56% below the 11-year exponential growth trend for Bitcoin. And the markets have rarely been so cheap relative to this trend. So Bitcoin is undervalued in Dan Moorhead's opinion. I think I said somebody yesterday, I don't remember if I said it here on the channel, but the whole Lindy effect and the whole concept of Bitcoin at 4,000 versus Bitcoin at 40,000, it's a lot less risky today than it was 3 or 4 years ago. So let's jump ahead and talk about more stuff. Obviously, this is data from Lycion, from Glassnode, and here you can see the continuous exchange of the continuous drainage of Bitcoin off exchanges. I'm kind of getting tired of talking about it now, but we're now at the 13% mark. Not too long ago, we were at the 18% mark, about 15, 14 months ago. That's a big, big move, ladies and gentlemen. But let's talk about what's actually happening behind the scenes. Forget exchanges. Let's talk about OTC transactions. Now, basically, this is from CryptoQuant. A big thank you as well, Sanjay. Whales are trading outside of the exchanges. No ifs, ands, or buts. And that was a radical change that went in place about 2 years ago, I think. Can't see the exact date on this chart. My eyes are not that good anymore. But the ratios of coins transferring involving the exchange to the overall coins transfer network shows it's at the lowest level since 2015. Basically, the fund to flow ratio is at the 90-day moving average. Now, high values indicate investors are actively using exchanges, but now it's deficient. And in this chart, you can see two major color bands. The violet, which is like the pinky stuff, is the estimate range for 1 to 10,000 coins moved by whale or retail holders. You can see that's all but almost gone away. And the red band is the estimated range of 10K moved by a whale and retail holders. Now, the centralized color bands have shown huge movements since August of 2020, basically nearly 2 years ago. And the collective moves are basically all done through OTC to avoid rattling markets. That means the people that are moving large amounts don't want to rattle markets when they do this. And again, the OTC balances are next to nothing right now. So this is all bullish, but it just means the type of accumulation happening right now is not reflected in the price. And this is vexing to many out there. But let's talk about some support level, because one of the things that's also vexing to many out there is the fact that they're waiting for Bitcoin to go to 25,000 or 20,000 or 18,000 or 15,000 before they jump in. Now, Glassnode, I've been talking about solid support level, increasing levels of support. Glassnode came out, and now they believe we have a new support level for Bitcoin, and that is at the $40,000 level per their charts and other information. And that is a huge move upwards. 40,000 as a solid support level. So yeah, we might wick down to 35,000 if there's a huge gray swan or black swan event. Who knows? But let's go a little bit further. Let's check in on Plan B and see what he has to say about this. again, because the market is so negative. I mean, way more negative than September or the summer doldrums or what happened in January before the invasion. Way more negative, and we are much stronger than we were back then, despite everything that's been thrown at this. But according to Plan B, some people, again, they're all talking about going down to 25,000. However, the last time Bitcoin has fallen to the realized price, which is, if you look at this chart here, I added a few little things to it. One, the black line is the realized price. The yellow balls are when cataclysmic events happened in the past in the history of Bitcoin. The Bitcoin prices with the red dots. And you can see the 5-month short-term holders in kind of the tealy color. And the dark one is the 2-year holders, the hodlers, as you can see. Now, the 3 big events that brought the price of Bitcoin back down to the realized price, the realized price today is 25,000, were, number one, the Mt. Gox hack in 2011. And remember, back then, Bitcoin was completely unheard of by most people. 2014 was the Bitstamp hack, and 2018 was the BSV fork. The BSV is the fork of Bitcoin. I think it stands for Bitcoin Scam Vision or something like that. But we'll talk more about that in a while, so be careful of that. But these are things that really brought down Bitcoin in a big way. So we will not be hitting the 25K, ladies and gentlemen, unless we get another big black swan event. And I'm not the only one who's been saying this, okay? Now I've got support from both Glassnode, a 40K support, and Plan B as well. So let's talk a little bit about Bitcoin versus Tesla. I've had this question a lot, and this will not be a Bitcoin versus Tesla video. That'll come later if you guys want. But it's funny. Bitcoin and Tesla are my 2 biggest bags by far. And I've never been called a Bitcoin shill or a Tesla shill. Crazy. Anyway, here we go. Bitcoin versus Tesla in terms of market cap. This is from Pantera. And the moral of the story, the reason I'm sharing it with you guys is, it's not by chance that they happen to be my 2 biggest bags. Obviously, they performed very well, but I went into them hard early with a mission in mind because I saw them both being very, very disruptive. Now, I thought the history from Pantera was super interesting. You can see Tesla is represented by the red line and Bitcoin's represented by the yellow line. But when you look at all of this, and as you guys know, correlation is extremely important. If you had gotten into Tesla between 2017 and 2019, you would have had a better ROI than owning Bitcoin. Ta-da! Isn't that stunning? And remember, Bitcoin has not even begun. I've been getting into Bitcoin and aggregating it, but I got into leaps on Tesla way back in, I don't know if it was 2018 or 2019, right after I bought my Tesla X. And ever since then, it's been, what was a small position, it's exploded into a huge position because of call options, leap options. And that's the story here. But the interesting thing about this is Pantera owned Tesla back in 2013, and they decided to flip their Tesla holding into Bitcoin. And what's very important nowadays is to be able to be on the right horse at the right time. If they had flipped into Bitcoin up until 2017 and then flipped back to Tesla for 2 or 3 years, they would have done much better. And then back to Bitcoin, they would have made absolute gargantuan money. So that's the message today. And let's look at the correlation between both. As you can see, the blue below is what I've charted out, and that is the correlation between Bitcoin and Tesla. And as you can see, they are not correlated at all. And this goes into the pair trading stuff that we are focusing on right now as well. So the correlation on average is about 40%, but you can see when it goes complete opposite directions, for example, those big dips in the teal blue at the bottom of the chart means they're very oppositely correlated, and that will trigger things like deciding when to switch program. Now, there's been a lot of talk about inflation and debasement of currencies and tokens and everything else. And I don't want to get political here, but I want to also point out one thing, that all things inflate. So fiat debases. Everything has a different word. So when a currency debases, when a currency inflates, it's called debasement, and it drives inflation. When a stock or when a token inflates, it can be called 15 different things depending on who you are. And when a stock does it, it's called dilution. But I decided to calculate for giggles, what is the inflation of Tesla over the last 1141 days precisely. So I did some calculations, and you can see back on March 1st, 2019, there was 172 million shares of Tesla. Then they went through a 5-for-1 split, which is quite glorious. We're going to get another split this year, probably another 5-for-1, I'd imagine. And that's a game changer when it comes to trading, but we'll talk more about that later. And then the amount of shares today is about 1.03 billion. If you calculate the effective annual dilution over that period of time, it's about 6.1% dilution per year, which is high. But you don't kind of notice it with stocks. In fact, many people don't even realize they do inflate, but they do. They issue more shares to do stuff, to raise capital, to build more gigafactories and stuff like that. So that's just important for you all to recognize. Everything pretty much inflates. Things that don't inflate or deflate are super interesting indeed. And Tesla Giga Shanghai is reopening April 18th. Good. That's good news. They've been closed for the bones of 3.5 weeks right now, which is not a good situation, but they are opening in part on Monday. Well done. So, but now at least they have 2 other gigafactories running, Berlin and Austin, Texas. So that will alleviate some of the pain. So let's switch gears and talk about TPD, transactions per day. Here, this was an article which got my attention. Avalanche could surpass Ethereum the next quarter in terms of this metric from Masari. And they're looking at transactions per day. So I decided, interesting, let's dig into this and find out what it means. So Ethereum transactions per day is falling and has been falling all year. It's gone from about 1.25 million since in January to about 1.1 million today. And this is the 7-day moving average, which is a little bit concerning. What's going on? Is the chain not being used, or maybe because the crypto markets are weak, things are kind of coming down, not being transacted as much, or maybe the NFT flare is going, or maybe there's cannibalization by other chains. I don't know. Let's dig in. Let's look at the Avalanche transactions per day. You can see that's been on a tear since September. Gone from basically close to 0 all the way up to nearly that magic bogey level of 1.1 million. So the chart here I charted out is I downloaded the TP transactions per day, mapped them on a chart, and I drew in a red line, which is the transactions per day for Ethereum, which translates 1.1 million transactions per day is about 12.7 transactions per second. Very important to know. As a comp, Solana does about 216 million transactions per day, excluding messages, it's about 72 million. So again, it's getting up there, but it's still a long way off what some of the other chains do. But it's a good thing. But I do believe that Avalanche will eclipse Ethereum. And that got me thinking, what else is going on with Ethereum? What else is happening with addresses? So let's look at active addresses. So here, this was a bit staggering, and there's a lot of interesting stuff here. Again, it's just 7-day active addresses by chain. But you can see, obviously, the biggest active address by chain. You have Binance Smart Chain, very large number, but down 8.3%. But one of the other staggering things is the Phantom number, which is very disconcerting, down 35% in a week, which is staggering. Now, I know the global cryptocurrency market is going through a few rough days. Market capitalization really fell under that magical 2 trillion that it reclaimed back in late March. And the on-chain activity of Ethereum also recorded a 10% drop, which is concerning. So we'll see what happens. A couple of other names, 2 names to point out is Ronin, after the hack, is up, and Salo is up as well. So note, this does not include all chains, just the ones that are listed by this Nansen company. But it made me want to dig a little bit further. So this was another piece from the top 10 DEXs TVL growth last week. So this is over the last 7 days. Now, percentage growth can be a bit misleading. So it takes a lot more dollars to move 30% when you are at $1 billion TVL in a DEX versus $100 million. And you can see Near is the fastest growing, but it is also small. It was just over 100 million a couple of weeks ago. So that's kind of the key thing. So what I did was, obviously you can see here, Near is 32%, Astar 24%, Moonbeam 21%, but also very, very small. So you got to look at the relative size of these. So I created another illustration just to put things in perspective a little bit. All the DEX TVL volume represented of the top 10 highest growing chains last week. And here, just for giggles, these are just numbers. When you take the top 10 fastest growing DEXs and look at the TVL they represent, Solana is the top at 28%, Avalanche is 26.6%, and BNB is 23%. Remember, this is DEXs only, just so there's no confusion out there. So it's interesting to look at, and of course, important to look at as well for valuations. Now, I did say at the beginning, BSV, BS Vision, Bitcoin Scam Vision, whatever you want to call it. Craig Wright, this is a cool article from Pronos, I think, Informed Crypto News. And they said Craig Wright used Slack app to threaten expert witnesses as they testified during the recent lawsuit in Florida, I think it was, because of the situation with Kevin Kleiman and others. But obviously, the way this guy, Craig Wright, is behaving, threatening people, expert witnesses, not to say what they were going to say on Slack has got to be a dumb move. I don't know what they think they can get away with in Australia, but this is, you can't do this in the United States. So anyway, let's be very careful. Again, as you know, I'm not pro BSV at all, especially with a leader like this. He claims to be Satoshi Nakamoto. Of course, he's not. So just be careful. Fraudsters are everywhere out there, so watch for them. Now let's talk a bit about the bond market. This is from the Financial Times. And this is just kind of stunning to see. You know, we've been talking about my anti-bond stance for ever since the start of the channel now, for over 14 months. But this year's hawkish change in tack from the Fed and others, ending the era of negative yielding debt, has really absolutely slaughtered the bond market, especially those with negative yielding bonds. We've been talking about that for a long time as well. If you look at this, it's $15 trillion in value just disappeared very, very quickly. You think this was like a rug pull on a meme stock or something, how bad this was. But it has been a bloodbath out there. And central banks are trying to get ahead of this inflation shock. And so the bond market has had to shift pretty radically. And that's what can happen. Again, it's important to get ahead of this and not be part of it as things come crashing down. So always watch for the macro stuff. This is all so predictable for a long time. Let's talk about crime and more Bitcoin, anti-Bitcoin FUD biting the dust. Chain Analysis basically ran a report, and about 0.15% of all cryptocurrency transaction volume is illicit, which is basically a nothing burger. Now remember, there are still scammers out there. Scammers do not qualify as illicit activity. Scammers are thieves. Different kettle of fish altogether. So be careful out there. This does not mean the scammers are going away. No, they're just ramping up right now. But let's compare this to fiat illicit activity just for giggles. Here, the UN Office of Drugs and Crime estimates that between 800 billion and 2 trillion of fiat currency is laundered each year. That's 5% of global GDP. So next time you hear a politician saying, that crypto is used for illicit activities, you just want to... gets me very ticked off. And switching gears, fiat, since we're on the subject of fiat, it was a few months ago in the Q&A I was asked about euro being a safe harbor during these market conditions. I think it was in January, right before the Ukraine invasion. And I said, hell no. I said very clearly that the European Central Bank prints even more than the Fed and offers negative interest rates. So now we've seen that actually play out in real time. So here you see the euro has tanked against the dollar. Focus your eye on the red arrow that has a dived 5% against the DXY, the dollar index, in a very short window of time. And if you look at your eye, you train your eye to the little arrow at the bottom showing the little uptick of the 25 basis points in rates. That can drive a huge amount of money movement. You know, anybody here in the cryptoverse, who would bother getting excited about a quarter of a point in interest rates? But that's how much cash there is in the system. The system is flush with cash. Money needs to find a home, and billions will flow to chase those 25 basis points. That's the world we live in. That's why we are still early. That's why I'm so amazingly bullish on where we are right now in winning names like Bitcoin and Tesla and a whole bunch of others. So with that, everybody, I want to say thank you, Weekly Snipes. You guys rock. And everybody out there in the audience, thank you for being so kind and respectful. Hope you all got something from this. I'll see you all tomorrow. Tomorrow is our weekly Q&A where we answer your top questions. And as I say, every week your questions get harder and harder and more relevant. So don't forget to tune in for that. Hit the bell or whatever you guys do. Thanks, everybody. Happy Saturday. Have some fun. See you tomorrow.